On Business Incorporated today, South Africa unemployment rate rises to 32.9% in the first quarter of 2023. Moody's places Kenya's government ratings on review for downgrade. And Zimbabwe sells $39 million worth of gold-backed crypto amid IMF warning. Good afternoon. Welcome to Business Incorporated here on Channels Television. I'm Ini John Mekwa. Let's dive into it, starting with market numbers, which is what we do normally. We start off with Africa and seeing the African numbers right there. We see that Nigeria is looking good, 0.25% in the green at intraday. Hopefully that will be sustained at 52,361.57. South Africa is also green, 0.22% at 78,431.38. A recovery we see there in South Africa. Let's go to other parts of the continent. Egypt is, however, on the flip side, more than 1% deep down there. It chopped off more than 1% from its all-share index, 16,945.01, while Kenya closed Monday's trade also in the red, 0.58% for Monday's trade. We move over to the Middle East now, where major equities that we report here also looking very red there. Abu Dhabi, 0.16% cut, 9,456.34. Dubai also 0.22% in the red, 3,517.72. We look at other regions there. Saudi Arabia gives us a little bit of breather right there, almost 0.5%. In the green at 11,280, while Qatar is positively unchanged for intraday. Now, the issue of the war going on in Ukraine has a lot of effect. One of that is Russian gas is not available to the European country because of that war. Germany is struggling to secure enough gas. Last year, we did have a lot of story on that as they struggle to get power to its industry and heat to the people's homes. Now, Berlin has settled a new plan for long-term strategy. We have Lars Holter now joining us from Deutsche Welle with the details. Hi, Lars. Good afternoon. So what's this latest plan? What's different and what's new about it?
Yeah, thanks for having me. So Germany is going all in on LNG, that's liquefied natural gas, investing in infrastructure to dock 2 LNG terminal ships in a port on the island of Rügen. They will receive LNG deliveries from other tankers and regasify it, then deliver it to the mainland through a pipeline, and is then fed into the existing grid. Now, this most recent plan is a bit smaller than the original version that included 3 fixed and 6 swimming terminals, but it should still be more than enough. As a matter of fact, analysts looking into the numbers say that the current plan still provides for an overcapacity of 37 billion cubic meters of LNG every year. So do we need all of it? Yes, says the government, in this case, Germany's Minister for the Economy, Robert Habeck. He says we need to build up significant reserves to cover in times of an emergency or another crisis. One thought is that a pipeline might be attacked, for example, or that Germany, for whatever reason might come up, find itself in a situation where European neighbors need more LNG and that Germany might want to assist.
And we've heard of some maneuvering around those liquefied natural gas tankers. What happened? What's the backstory?
Indeed, that's because those tankers that will be stationed on the island of Rügen were quite controversial. Now, Rügen is Germany's biggest island. It's located in the Baltic Sea. Rügen was supposed to be hosting these LNG tankers in the port of Selin, but that is a town that's very popular with tourists. And so 2 important economic interests were clashing. Rügen is a prime location for LNG tankers, but it's also one of the country's big tourism destinations. And big tankers just don't fit that picture. So there were major protests for a while, and Economy Minister Robert Habeck was a regular guest on the island, desperately trying to get a handle on the situation. Now, Rügen is getting fewer tankers, and they're being moved to another port that is mainly an industrial port. It's located off the tourist sites.
So we have families and companies, everyone, markets, following up with this. Is everyone happy with this new plan?
Of course not, because there's probably no way to make everyone happy. But there is big relief in the industry for sure, as it seems there will be enough supply to get the country through the next winter and ensure there's enough gas for those companies who depend on it, whether that would be for energy or as a raw material, like the chemical industry, for example. However, there are critics, mostly environmentalists, and they're saying Germany is really overdoing it here. Their numbers say that by 2026, Germany will be ready to accept 140 billion cubic meters of LNG, but needs only 80. The downside, now emergency planning aside, they say this will take pressure off the government and of the industry, of course, to further increase renewable energy projects. For a while, it looked like the recent energy crisis could really help speed up solar and wind development. And critics worry that building up such a big gas infrastructure now means that some of these projects might be dropped again.
Well, as you said, there's no way to make everybody happy last, but thank you so much for the updates from Germany. All right, let's cross over to the UK now. Juliana is joining us from home. Hi, Juliana. Good afternoon. How are the girls doing? And well, that's not part of the conversation. But I mean, windfall tax, we were thinking of increasing the windfall tax again, Juliana, and now the big guys are already complaining. We need those money from the oil and gas sector, you know, to trickle down to everybody else.
We do. Thank you for checking in on the girls. It's actually my eldest daughter's 14th birthday. I just thought I'd get that out of the way as soon as possible. But you are right. There has been an intervention today by Sir Jimmy Ratcliffe, who may not be known by some people, but he is a British billionaire. He's actually in the running to buy Manchester United Football Club. But for this topic, he's important because, of course, he is the owner of the petrochemicals firm Ineos, which basically owns the largest pipeline in the North Sea. Now, he has been speaking to the Financial Times, basically complaining about windfall tax, also known as an energy oil levy. This was, of course, put in place last year when Rishi Sunak, the Prime Minister, was the Chancellor of the Exchequer, because we were going through a significant cost of living crisis. Cross-party MPs, as well as the British public, were pretty ticked off that the likes of BP and Shell were reporting extraordinary profit at the time where lots of British households were struggling whether or not, you know, they could eat or heat their homes. So the windfall tax was put in place, taking tax on profits in the North Sea from about 40% to 75%. And now Jimmy Ratcliffe has been complaining and saying that, you know, these firms are being taxed to death and, you know, there's no point of imposing such a tax, because how else are these individuals, these firms, going to be able to fund future investments? And that's the crux of his argument. And it's, as I said, it's a fiery debate in the UK at the moment. Just recently, I think it was a couple of weeks ago, we had further updates, trading updates from BP and Shell showing that the extraordinary profit drive continues, even though we've seen that the price of gas has dropped significantly since the onset of the war. I think one of the issues now for a lot of these big firms, including Ineos, is what does the Labour government do? We had local elections a couple of weeks ago, just before the coronation of King Charles III, and the Conservative Party lost over 1,000 councillors to Labour, basically showing that Sir Keir Starmer is Prime Minister in waiting. And he has responded to Sir Jimmy Ratcliffe's comments to the Financial Times today, saying that the Labour Party would do more. So I think there are going to be a lot of nervous investors because we are going through a cost of living crisis. There's got to be a way of funding it. And this energy profit levy is expected to raise £26 billion, which, of course, as we know, is money that the government can't afford to throw away.
Yeah, well, a lot of interconnection and relationship between politics and the economy. And, you know, sometimes politicians are dragged on two sides. They don't know which way to go first. But you also have this criticism of the authority, the Competition and Market Authority, because of Microsoft's decision to acquire Activision. Why is that?
Yeah, this is a developing story, actually, and it's pretty much a slap in the face for Britain's Competition and Markets Authority, which is basically a regulator that oversees deals to make sure that consumers are not left off worse because of a merger. A couple of weeks ago, the CMA, after 6 months of an extensive probe, decided not to give the green light to Microsoft's £53 billion acquisition of Activision Blizzard. Anybody with young kids may know Activision Blizzard, Candy Crush. I think we've all played that before. They own that. Also, they own some pretty popular PlayStation 4 and 5 games. And the concern from the CMA was that if Microsoft was to merge with Activision Blizzard, there'd just be no space for any competition, particularly in cloud gaming. Now, what we heard from the EU is that EU regulators have given this the green light. And it's pretty stark and shocking for two regulators, both seeing the same amount of evidence, to have strikingly different conclusions. And that's what's happened. And, you know, when the CMA did give their findings to Microsoft a couple of weeks ago, the CEO said that it was the darkest day in their 4 decades of working in the UK and that Britain was no longer attractive. And then, of course, fast forward to today, EU regulators have given this acquisition a green light. So it doesn't fare well for Britain, particularly as this was the CMA's first big post-Brexit test. And it does appear to have failed. What happens with this acquisition now? Now, that is the £53 billion question. It is still going through American regulators. I believe the financial trade revenue in the US is apparently suing Microsoft to ensure that this merger doesn't happen. But yeah, not great, particularly as we just were speaking about Jimmy Ratcliffe saying that he doesn't think Britain is competitive. Then we've got the result from the EU completely going against what the British regulators have said. Yeah, so not great, but it does appear as if this deal could be going ahead after all.
The market looking at this time intraday?
Yeah, the market's not looking bad, actually. I was on Business Morning earlier today discussing with Vladdy the big news story of the day for business, which, of course, is about Vodafone and the fact that they have decided to cut 10% of their 100,000 strong global workforce to try and usher in a €3 billion savings drive. Their shares dropped about 3%. Investors are not happy, but that wasn't enough to tip the market into the red. So at intraday, the FTSE All Share is up 0.02%. The FTSE 100 is up by 0.03%. And the FTSE 250, the domestic market here in the UK, is up by 0.07%. The rally of the British pound against the US dollar still continues. £1 will get you $1.25 at intraday. It's up by 0.10%. That's a giant leap, actually. But the British pound is trading down against the euro by 0.10% and down against the Japanese yen by 0.06% at intraday, Winnie.
All right, Juliana, thank you so much. Enjoy the rest of your day with the girls. All right, let's take a break now. When we come back, we do have a whole lot of stories waiting for you on the other side of Business and Corporate Said here on Channels Television. You're welcome back. It's commodities time, and copper is in our line of view now. It's been termed the most versatile metal and a major component in the production of power transmission cables, electric vehicle, which is becoming popular these days, the batteries. And we saw recently that the price of copper, for a change, is declining. In fact, in the last 3 months, it's declined by 11.82% to about $8,240 for a ton, and that's in May from more than 9,000. Interesting, yeah. But let's delve into this with Adeye Adegusi. He's an analyst with Financial Derivatives Company, and he joins us virtually from Victoria Island. Hi, Adeye, good afternoon. So, it's good to see something reducing in price for a change, but it also, raises some questions. What's driving this decline in the price of copper?
Thank you for having me. So after rallying at the beginning of the year to about $9,000 per ton, copper due to renewed investor sentiment and improved demand after China eased COVID protocols, copper prices they are beginning to slide back to their late 2022 levels. And as you said, they have declined by over 10% in the last 3 months and are now close to $8,000 per ton. And this decline can be attributed to a slower than expected recovery in China's manufacturing sector. And also, you can't take away the global monetary policy tightening cycles and elevated inflation rates that have stunted consumption. But in terms of China, their manufacturing PMI has declined for 2 straight months to 49.5 points, which is below the 50 points threshold. And a PMI below 50 points indicates that there's a contraction in the sector. Also, refined metal imports in China have slumped this year. In the first quarter of 2023, the value of refined imports into China declined by 16% year on year, and so this has ultimately contributed to the decline in prices of copper. But however, more in the long run, due to the growing importance of a switch to renewable energy, and of course the fact that copper is used in the battery of electric vehicles, copper prices are expected to rebound and recover and remain elevated in the long run.
And yet, the Economist Intelligence Unit, the EIU, is projecting a drop in production. I mean, and as you noted, we see the popularity of EVs and copper and, all those cleaner energy away from fossil fuel gaining popularity, and yet they're projecting that copper production is going to reduce.
It's more like a supply deficit where the demand outpaces the growth of demand outpaces supply. The EIU projects demand to grow by 1.5% to 26.1 million, while supply grows to just 22.5. That's creating a deficit of about 3.5 million tons. On the demand side, there's a case where, as you said, the rising demand for electric vehicles, supporting demand, and also China's economic recovery is expected to, rebound more in the coming months. And on the supply side, in response to this growing demand, you have producers. There are more mining restarts, like case where the uneconomic mines are now being continued. Operations are being continued to boost production. So now the supply deficit, of course, is expected to remain in the near term because there's a lag between building a copper mine and when you see the produce. So supply deficit is expected to remain in the near term. But then in terms of like switch to electric vehicles, it still remains feasible because demand is increasing, supply is increasing as well. And there's a case now where there's the Newmont mining group. They've acquired the Newcrest mining group as well. So now it's said to add about 5 billion pounds of copper into Newmont's portfolio, which means that there's a potential for an increase in copper supply in the near term.
All right, so very briefly, Nadeye, where does Nigeria fit into all of this?
Well, I said that Nigeria has about 10 million tons of copper ore deposits, particularly in the northern states. But however, we still import a lot of copper-based byproducts. But there are a lot of challenges in the mining, not just copper, but the whole mining sector in Nigeria. The infrastructure, power, because mining is a very power-intensive sector, and with the current power challenges we have, of course, it will stunt mining growth. There's also regulatory bottlenecks and low productivity due to use of crude tools, and there are a lot of benefits to mining because, as you can see from countries like DRC and Zambia, where they've recently signed a memorandum of understanding with the US to boost production and create EV battery supply chains in their country. They expect that there is a potential for copper mining in Africa and Nigeria as well, if we tap into this.
Obviously, a lot of potentials as usual, Adeye. Thank you so much for that. And we hope the new administration would at least give some attention to it, among other things, to explore some of those potentials. Adeye Adegbusi is an analyst with Financial Derivatives Company. Thank you for your time this afternoon.
Thank you for having me.
All right, move to South Africa now, where the unemployment rate rose 32.9% in the first quarter of 2023 from 32.7% in the final quarter of last year, according to data. This shouldn't come as a surprise. We've had that issue with electricity supply and all of that, but our reporter captured it in this report.
The result of the quarterly labor force survey shows that the number of employed persons increased by 258,000 to 16.2 million in the first quarter of 2023 compared to the fourth quarter of 2022. The number of unemployed persons declined by 179,000 to 7.9 million in the same quarter. Additionally, the number of people who were not economically active for reasons other than discouragement decreased by 209,000 to 13.2 million, and the discouraged work seekers decreased by 87,000 in the first quarter of 2023 compared to the fourth quarter of 2022, resulting in a net decrease of 296,000 in the not economically active population. These changes in employment and unemployment resulted in the official unemployment rate increasing by 0.2 of a percentage point from 32.7% in the fourth quarter of 2022 to 32.9% in the first quarter of 2023.
We now move to Kenya, where New York credit ratings agency Moody's Investors Service has downgraded Kenya's long-term foreign currency and long currency issuer ratings to B3 and placed them on review for further downgrade. The agency said the downgrade is due to increased liquidity risks faced by the Kenyan government. The country's domestic funding conditions have worsened, leading to financing shortfalls and delays in government spending. Moody's also lowered Kenya's local currency and foreign currency country ceilings. The Reserve Bank of Zimbabwe has sold $39 million worth of gold-backed crypto, around 14 billion Zimbabwean dollars, in an attempt to stabilize the country's economy and reduce the continued depreciation of the local currency against the US dollar. This is coming despite warnings from the International Monetary Fund, the IMF. The tokens were sold at a minimum price of $10 for individuals and $5,000 for corporations and other entities. The RBZ announced on May the 12th that it had received 135 applications totaling 14.07 billion Zimbabwean dollars to buy 139.57 kilograms of gold-backed cryptocurrency. The IMF warned that the introduction of gold-backed crypto tokens could pose a risk to the country's financial stability, stating that the sale of these tokens could pose a risk to Zimbabwean dollar volatility. And projects for power connectivity between Uganda and Rwanda are back on profiting from warming relations between the two sides, as are some of the projects meant to enhance the East African power pool. The Rwanda-Uganda high-voltage power trading was expected to start in 2020. Completion of the project will see the power exchange rise from the current 2 megawatts to over 200 megawatts. The two countries have since 1995 been exchanging power at the Sianika border, which serves Kisoro in Uganda and Gatuna. Both countries produce power more than they can consume, although they are constrained by low power distribution networks. That's the program today. Thank you so much for being a part of Business Incorporated. Another episode tomorrow. Let's do it again. I'm Minnie John Mekwa. Enjoy the rest of your day.